Here are 3 investment options I wish someone told me earlier. Whether you are a confident investor hoping to create a strong portfolio or a beginner looking to keep things simple, choosing one or more of these investment options is an easy way to make your money work for you. If you appreciate the time and research that goes into making such videos, please hit the like button and subscribe to the channel. With that said, let us start. The first investment option that you should consider is investment ISA. If you are looking to grow your wealth and make the most of your saving, then you need to pay close attention to this. We will explain what an investment ISA is, its benefits, and how you can get started. What is an investment ISA? An investment ISA is a tax-efficient investment account that allows you to invest your money in a range of financial products such as shares, bonds, property, and funds. Unlike a cash ISA, which is a low risk and offers very little interest, an investment ISA offers the potential for high returns but carries some level of risk. One of the main advantages of the investment ISA is its tax-efficient nature. Any returns or growth within the ISA are tax-free, meaning you don't have to pay income tax or capital gains tax on your investment gains. This can significantly boost your returns over time compared to investing outside an ISA. The second benefit to investing in investment ISA is it allows you to diversify your portfolio by spreading your investment across different asset classes. By diversifying your investment, you can manage risk efficiently and increase the potential for long-term growth. The third benefit is its flexibility. Investment ISAs offer flexibility regarding types of investment you can choose, whether you are interested in individual stocks, bonds, funds, or ETFs. An investment ISA provides a variety of options to suit your preferences. So, how do you actually start investing with investment ISA? 1. You need to look for the right provider. Look for a reputable ISA provider that offers a wide range of investment options and has a good track record. Consider factors such as fees, customer support, and the ease of use to find the best fit that meets your needs. 2. Determine your investment goals and risk tolerance. Before investing, it is crucial to understand your financial goals and the level of risk you are comfortable with. Based on your goals, you can identify suitable investments that align with your risk appetite. 3. Start investing. Once you have chosen the right provider and have a clear investment strategy, it is time to start investing. Research potential investment options, diversify your portfolio, and monitor your investments regularly. The next point is monitoring and reviewing your investment ISA. It is important that you regularly review and reassess your investment portfolio to ensure it still aligns with your goals and risk tolerance. Stay informed of what is happening in the market, any changes in the economy, and of course, if there's any changes in your chosen investments. Remember to always consult a financial advisor if you need assistance in managing your investment ISA effectively. The key to any investment success lies in careful planning, diversification, and regular monitoring. So take the first step towards achieving your financial goals by opening an investment ISA today. The second investment option is stocks and shares ISA. A stocks and shares ISA is an investment account that allows you as an investor to invest tax efficiently. One thing to point out though is that this type of account is mainly beneficial for those that are living in the UK. So if you are living in the UK, please pay close attention because there is money to be made here. What are some of the benefits of investing in the stocks and shares ISA? Here are 2 main benefits of investing your money in this type of account. Any income or gains you make are free from UK income and capital gains tax. So to bring this home is any money you invest in this type of account is free from UK income or capital gains tax. That is to say that any dividends and interest payments from your share, if you choose to invest in this type of account, are completely tax-free. Just to clarify, capital gains, which is also known as CGT, is the tax that you pay on any gains you've made from selling in assets, such as shares. The current UK allowance is £6,000, but you can search on the UK government page to keep yourself up to date because this figure keeps on changing. The other advantage to this investment option is its flexibility. As an investor, you can choose to invest your money in a wide range of investment. What are some of the risks associated with this type of investment? As with all investments, there is risk involved with the stocks and shares ISA. It is very important to remember that the value of investments and the income from them can fall as well as rise. Before jumping to invest in this option, you need to be clear with how you feel about risk and how able you are to take losses. The third investment option that you could consider is invest in self-invested personal pension, also called SIPP. This type of investment is ideal if you like flexibility, tax-efficient retirement account that puts you in control. So, what is a self-invested personal pension, also called SIPP? A SIPP is a pension pot that holds your investment in one place until you retire and decide to draw retirement income. You can choose how much you want to invest and how much you want to take out from age 55 onwards. You can transfer most of the types of pension to the self-invested personal pension and combine them, letting you manage your pension pot in one place. This investment option allows you to invest in a wide range of investments, including shares, exchange-traded funds, ETFs, which can help diversify your portfolio. Here are some benefits of investing in the self-invested personal pension. 1. Any investment within the SIPP are free from UK tax, including capital gains and income tax. 2. Your self-invested personal pension receives government tax relief. Say for example, you invest £6,000 in the SIPP. Then the HMRC will add £1,500 to make £7,500 for you. So to summarize this investment option, a SIPP option will offer the following. 1. Helps you save tax efficiently for your retirement. 2. Gives you the freedom to choose where to invest your money and spreads your risk. 3. It reduces inheritance tax by passing on more of your money. So these are just 3 of the many investment options out there, but I thought I would share these with you as I also continue learning. If you found any value in this video, please hit the like button and subscribe to the channel for more content like this. Remember to share this video with your friends and family members. You will be doing them a big favor. Thanks for watching and see you in the next video.